it's Stephanie Johnston with the Johnston team of Service First Mortgage. And today I wanted to talk a little bit about interest rates and the market. So this video is in kind of conjunction to another video that I've done that's on my YouTube channel. And that has got information on how everyone's rate's different. So what are the things that affect each person's interest rate in regards to their specific home loan? What we're going to talk about today works with that, and it's what interest rates do and how the market affects interest rates and how they change all the time. So on this screen, we've got a crazy chart here. I'm not going to need you guys to understand all these numbers on here or what this looks like, but I want to more show you this for trends and also show you what we do in the back end on your mortgage and monitor the market to make sure that we can lock you in at the best time to get you the best interest rate. So this chart is called basically mortgage-backed securities. And so this is what we follow to know what rates are doing. The main thing to know about this is the higher this number is, the better rates are. The lower that this is, the higher rates are. So it's backwards, first thing, because the first thing is just, yes, we've gone up a little bit since on this chart. This is over about a 2.5 year period, so I wanted us to go out the longest period, and then we're going to kind of dive into what's going on currently. So if you think of interest rates, they move just like the stock market. So things in the marketplace are going to change what rates are going to do. So that can be a gradual change, or it can be something that happens suddenly. So gradual changes would be things like the federal Fed funds rate getting raised over time, and everyone's saying interest rates are going to go up and they're going to raise them gradually. Usually when that happens, rates are going to follow. So sometimes a gradual shift in that. Or there can be things that happen unexpectedly that can move the market very quickly. So that's the main thing to remember, that if we get you a rate quote one day, that is not going to be the same rate even the next day or sometimes in a couple of hours. So certain markets are more stable than others, but they can always change. So when we do go through our consultation or appointment with you, if we have not done that, we kind of talk about this and what trends are doing and what to kind of expect on a high and low based on when you're going to be purchasing, because we want to make sure that you've got the proper expectations for what that payment's going to be and how much this could, of course, change your monthly payment. So if we kind of look at this chart, a couple things to note. First one up here is we've got a pretty big decline in this graph, which again means increase, in November of 2016. So if everyone remembers what happened in November of 2016, we had a presidential election. And the increase that resulted was not necessarily based on, who won or that. It's because it was different than what was predicted. So before an event happens, markets have already baked into the just like the stock market, the bond market too, with what's expected. So then if what's expected doesn't happen, the market needs to correct itself. And that could be an increase or decrease to rates, again, based on what was predicted. So from November 4th down here to November 14th here, so a pretty short period, even just from till the 10th, we had about a 0.75% increase in rates very quickly. So just to note, that can happen, but is not normal. The last time we saw this more than 10 years ago, that it happened that quickly in a very short period. Then, as we see, we have a lot of peaks and valleys as we come. That is what we normally see in rates. And our goal is, of course, to hit it at a good point, but we normally see ups, downs, ups, downs. Then we come across and we go to January of 2018. And we said, okay, well then we've got not such a sharp period, but from January over to, February, we did see a pretty sharp increase over more of a 45-day period versus a 2-day period. So the same thing, rates went up a big chunk during that time. And a lot of things kind of played up to that. So again, when we talk what's going on in rates, that can be things like the Fed raising rates. So we knew that that was going to happen this year. The tax plan passed, which was helping the stock market. So when the stock market does really well, generally interest rates go up. So we always say your 401k is doing fabulous, rates might be a little higher, and vice versa. So when we do well, sometimes don't look at your 401k that day, it's not doing that great. So a lot of just different things led up to why this happened. And the big thing to remember is we thought rates were going to be at this point much sooner. All forecasts said we were not supposed to be where rates were in the beginning of 2018 when they were. So this kind of happened. Then, some peaks, valleys, and again, go down here to current and kind of peak over at the middle of May. And then we go up and we get a lot better in this last little bit. So right now we are May 31st, just kind of for reference. And we had some overseas activities this week that caused rates to actually have a pretty good week and come down. So things all overseas with their markets, political unrest, can change things. Some examples here, jobs reports, inflation, all of that stuff is affected in rates. So the point of this video is not to have you understand to go forecast or what's about to happen, but is that rates change every single day with the marketplace. And we are here to be your advisor on what to do and what rates are doing. And always remember that, again, what we talk about up front at pre-qual is going to continue to move. And then once we get closer to the purchase, we're going to continue to watch this and make sure we get you the best deal on the interest rates available for that time. Hope this information is helpful. Call me if you need anything or reach out. Again, it's Stephanie Johnston with the Johnson team of Service First Mortgage, and talk to you soon. Thanks.